Yes guys, how are we all? Welcome to this new video. Guys, this video is going to be centered around beginners of trading. Everything you need to know to take you from A to Z, from knowing absolutely nothing to taking your first trade and knowing exactly what you're doing inside the markets, understanding all the terminology, and obviously being able to do this on your own to a certain degree. So watch this video to the end. If you're a beginner, this is going to be perfect for you. Fantastic guys, so this is going to be a super beginner friendly session. Basically this is going to be for everyone, from someone who's never traded in their life to someone who's new, traded a little bit, but obviously wants to understand a little bit further. And also for those of you who are already in the markets, you already understand how everything works, but you want to understand a little bit more about strategy, wait till the end of this session. We're going to talk a little bit more about that as well. So it's going to have a little bit for everyone's levels. So if you're maybe a little bit more advanced, the beginning part might be a little bit easy for you, but it's good to refresh anyway. So all right, let's get started. So for those of you who are brand new to trading, never traded before, what is trading? In another word, all it is we're buying and selling assets, and we're making money on the movement of the assets prices. So for example, if this iPhone here costs $1,000 to purchase, if I bought 10 of these iPhones and then they doubled in price the next day, I'm making double my money on every single one of these iPhones. Now, the best part about it is it's 2024, so we no longer have to buy physical things, right? We can do it online. So that's where our trading is done. It's all done online. When we buy and sell these assets, it's always online, and obviously that is where we make our money. So when we say we are trading, all we're doing is we're going to go online onto the financial markets, buying and selling and making profits on the movement of the market. So it is as simple as that. All we do is we make profits on the movements of the markets, whether it goes up or if it goes down. And for example, for us, we're trading gold at the moment. So for the price of gold against the US dollar, so if the price goes up or if it goes down, we can make money either way. Now, some advantages of trading. Now, if you've never traded before, trading is the most profitable industry in the world. There is more millionaires created from trading than any other industry in the world. Have a look for yourself. So there's a lot of research on this stuff. Finance and trading is the #1 industry for making money. So if you are someone who simply just wants to make money, then trading is the industry for you. Why I got into trading was because I wanted a better life. I knew people that were trading and were making a lot of money. And obviously I thought this is what I wanted to do. I put the time in, put the effort in, and here I am today. So if you want to get into a profitable industry, this is definitely for you. Another advantage is you don't need to deal with anyone. You can literally wake up, speak to no one, be in the middle of a bush somewhere in fucking, I don't know, God knows where, and open up your phone, open up your laptop, look at the charts, make some trades and make some money. So it's very, very advantageous in the way that you don't need to deal with people. You don't have to talk to your boss. You don't have to worry about your colleagues. You can literally do it on your own. No one to boss you around, no one to tell you what to do. On your own schedule. The markets are open, you can make money. It's as simple as that. There's also no time limits. There's no one telling you you have to wake up at this time, you have to wake up at that time. You can literally trade at any time that the markets are open, right? So if you have a strategy that works, this is why it's so important to learn the skill, because if you understand the skill, then you can do it at your own pleasure, right? And you can obviously make money from now to the end of time, because the financial markets will always be open. And obviously there's no physical products when it comes to trading. You're not trading physical things. You're not buying and selling. You don't have a shop. This is all done through your phone. All you need is some internet. It's as simple as that. All right, so let's get into the basics. How do we make money trading? Now, like I mentioned before with the iPhone, we make money on either the markets going up or down. So Basil, how do you make money if the markets are going down? Shouldn't you be losing? No, because buying and selling is a metaphoric term. We're not actually physically buying and physically selling. What we're doing is we're guessing if the market is going up, or we're going to guess that the market is going to go down. So in other words, we do research in the markets to understand whether or not the market is going to go up or down, and then we take a guess on this. Or we take an educated guess on this, and if we're correct, we're going to make money either way. So if I think from my analysis, from my research, from my strategy that the market is going to drop in price, I can make a sell a sell. Keep in mind, this is a metaphoric term, you're not actually selling, but I can make a sell trade, and if the market does go down in price, we're going to make money, right? So whether or not the markets are going up in value or down, we can make money either way. So this is, again, metaphoric terms. We're not actually buying and selling things physically. Buying simply means we're thinking that the markets are going to go up, and selling, we're simply thinking the markets are going to go down. It is as simple as that. It's a very, very easy concept. No need to overcomplicate it too much. Now, what are the markets? So the markets are where all the trading is done. However, us as retail traders, so if you don't know what a retail trader, it's just an everyday person, basically. There's two types of traders, retail traders and the big companies and the big banks and all these people, right? So we're just average Joe, average Baz. We're called retail traders, and the only way we can enter these markets is through a middleman called a broker. So that's where we create our account, we get ourselves set up, and then we're able to enter these markets, and we're able to buy and sell in these markets, and we're able to make money. So that's a very, very simplified version of what trading is, and obviously it's not too complex in understanding what it is. We're basically making money on the change of price of assets. And the best part is we can do it online, we don't have to do it in person, etc., etc. Alright guys, so the biggest #1 website that you will use as a trader is called TradingView.com. So if you've never heard of that before, write it down right now. So it's called TradingView.com. Now, TradingView.com is going to be the #1 website you use, because this is where you're able to see the markets and the prices of things live, right? It's a very, very good website. Every single trader in the world uses it. Doesn't matter where you're from, what level you are, etc., etc. If you are a trader, say hello to everyone. If you are a trader, you're going to use TradingView.com. So what it is basically is you're able to go on this website. I'm going to pull it up now, so I'm going to share my screen. So this is TradingView.com. Now, if you've never used it before, I'm going to give you guys a quick little rendition on how to use this. It's very, very simple, especially when you get the hang of it. It's a very, very useful tool that you can use to make your own trades, to understand what's happening in these trades, to understand how to look at the markets. It might look very complicated now, but trust me, in half an hour you'll understand everything. So once you enter TradingView.com, you're going to come to this page here. Simply make a free account. It's free. You don't need to pay for a subscription, and all of that stuff is unnecessary, really. So make a free account, and then once you've done that, you're going to be able to press any of these here. So these are going to tell you the markets for gold, for silver, for Forex. What Forex is basically the currency markets. So for example, the US dollar against the Japanese yen, the movement in price is going to be what you're going to be trading if you're trading that. There's going to be Euro to USD, GBP to USD, Australian dollar to the US dollar. So the movement in the prices is what you're trading in Forex. Obviously there's going to be crypto, so there's going to be Bitcoin, Ethereum, Solana, all of these coins as well that you can also trade. Exact same concept, you're just trading a different asset. So remember at the beginning we mentioned that all trading is we're looking at assets, prices, and we're making money, right? So every one of these is a different asset. So you got stocks, indices, ETFs, etc. So what we're going to be doing is we're going to look at futures, and we're going to look at gold, because that's what we mostly trade. And then you're going to open up the gold charts. So we're going to click gold, and then it's going to come up with this page here. Now, once you've reached this page here, this is the main page you're going to be using to analyze charts for the rest of your life, right? So this is called, market structure. Now, when you look at this page, it might look very complicated. What is all this? What are all these lines? What does all this mean, right? Trust me, it is not as complicated as it looks. So if you have a look here on the right hand side, this is the price of the asset you're trading, right? So this asset here is gold, right? So now we're at 23.71, and as you guys can see, this is a live chart. So at the moment, everywhere in the world, the price for this is exactly the same. And you have traders in Australia, and traders in Japan, and traders in China, and traders in Dubai. They're all looking at the exact same chart that we're looking at here right now. And the prices are going to be exactly the same for every single person. And as you guys can see, this moves live. So right now the markets are open because it's between Monday and Friday. So the prices are moving as we speak. See this 20, now it's 2371.1. Let's see what happens after now. Might go down, might go up. Let's have a look. Is it going to go down? Is it going to go up? It's gone down to 70.9. So this is a live chart, right? And if you guys have a look at these individual lines, let's zoom in a little bit. You're going to see that some of these lines are red and some of these lines are green. Now, all of this is very, very simple. They're called candles, and all they do are they're a representation of time versus movement. So every one of these lines represents a certain amount of time on the chart. Now, if we have a look at the top left corner, it says 1 minute. So I'm looking at the 1 minute chart. So that means that every minute, a new candle is made, and it either goes up or down, and it depends on how the market is moving. But say, for example, guys, if we have a look on this green candle, in 1 minute it only moved a little bit upwards, and then the one next to it, in 1 minute it moved down quite a lot, and then the next minute it kept moving down, and look at how big this one is, and this one's even bigger. So in 4 minutes the price moved quite a lot down, and then the next 2 minutes the price only moved a little bit upwards. So if you're looking at this just as a general sense, you can see that the market trend is downwards, right? Look at this huge downwards trend. So if you're someone who's looking at this and you want to understand, is the market going upwards now, is the market going down, you're going to be looking at these candles and deciphering whether or not the trend is downwards or upwards. Now we're going to get into that very, very shortly, and I'm going to give you guys a strategy that I personally use that I think is fantastic for beginners as well, to start looking at what sort of trades to be doing yourselves using this strategy. It's very, very simple. We're going to get to that very, very shortly. So yeah, a very, very simple concept, TradingView. Now, when we trade with something called leverage, right? Some of you may have heard of it, some of you may not have. It is a very simple concept. Basically, if you are someone trading with a small amount of capital, so a small amount of money, and you want to be able to make larger profits, you use leverage on your trades. So what does that mean? Now, if I'm someone who's trading with $1,000 and I'm using leverage, it is as though I'm taking this trade with a lot more money than I have in my account. Now, one of the benefits of this is that if our trade is good and we make profits, we're going to make a lot more profit than if we only had that $1,000 we were trading with. And obviously the exact same thing, if we lose the trade, we might lose a little bit more. But obviously, if you're a good trader, then you're going to win more than you lose. And obviously that's the aim of the game. So that is what leverage is. It's very, very important, especially for day traders, because at the end of the day, guys, we are day traders. Now, what does day trading mean? Day trading simply means that in one day we make multiple trades. We're not buying today and selling next year, right? So there's different types of traders. So let's go through this one really quickly. There's multiple different types of traders, and depending on your situation, depending on what sort of person you are, depending on how much time you have, depending on so many different things, you can put yourself in a category on what sort of trader that you are. There's one of the categories called swing traders. Now, these people usually trade long term. They buy now, they sell in a couple of months' time, they take their profits, right? And they basically look for big swings in the market, and it usually happens over a medium to longer term. It's not buy today, sell tomorrow. And then there's day traders, right? So now day traders is what I am, what all of our members are, or most of them at least. We basically look for opportunities every single day in the markets. So we're making money, we're looking to make money every single day in the markets. We're not looking to make money next week or next month. We're looking at opportunities today. We're looking at what's available for us to trade, and we're going for profits daily. Now, this consists of trades that are done, maybe that we post them now, we sell in an hour's time, maybe 2 hours time, maybe 20 minutes time, depending on how the market is moving, but we take multiple trades per day. And that way, every single day, we're building our accounts, we're making money, and obviously we're continuing our growth. So that is what we are. We are day traders. We look for multiple opportunities per day, and then obviously that's how we grow. Now, if we're going to have a look at this one, guys, we're going to look at a trading chart. So this is what this is called. This is just simply a trading chart. Now I'm going to run through you guys a very simple strategy that as a beginner you should be looking for, that you should be looking out for, so that you can start making some profits on your own trades, and you can obviously follow along on the trades that we post on the VIP also. And this strategy is simply relating to something called obviously resistance and finding support, right? So it's called support and resistance, and we trade support and resistance. Now, what does this mean? Support and resistance sounds complicated, right? Simply put, I'm going to draw a line for you guys. Let's have a look. All right, let's have a look at this blue line here. So say for example, I'm going to put another one here. This is the market, right? So the market's gone here and it's touched this blue line. Now the market's gone down here, and then again the market has gone back up and touched this blue line. And then one more time it's gone back down again, and then it's touched that blue line one more time. We call that, guys, a resistance point or a resistance area. Why? Because the market is trying to break past that price or that point, and it's struggling to do so. And not only has it done it once, as you guys can see, this is the first time it's tried to break free, but it can't. It keeps going back down again. It's done it twice. It's done it 3 times. Now this is where you guys need to be making sure that you're getting strong support and resistance and not weak support and resistance. And the easiest way to identify whether or not it is strong is if you guys see it 3 times, right? So 1, 2, 3, okay, this is a strong resistance point, which means, guys, on the next, after it hits here, what is most likely going to happen? Very simple question. Most likely it's going to go back down, right? Because it is a strong resistance point. We've seen it happen 3 times before. We know exactly what's going to happen here. It's going to struggle to get past, and it's going to go back down. So logically, what would be your trade here? It would be you guessing that the market's going to go down, because we've seen it happen 3 times before, and this is the resistance point. Now, it is the exact same concept if the market was going upwards. So if it was an upwards trend. So if I do this again, so we're looking for whether or not the market is going up or down using something called market trend. So as you guys can see, this is clearly going upwards, this is clearly going downwards. So this is upwards trend here, downwards trend here. Now the easiest way to find a trade is to just follow the trend. You guys are retail traders, which means that you are not like big banks or something. Who are you to go against the market? You know what I mean? So you just need to go with the markets. You need to look for opportunities that go with the markets, because it's the easiest way to make money. So if we simply look at this chart, perfect. So if this is an upwards trend and this is a downwards trend, we're going to simply look for trades relating to whether or not the markets are going up and down. So if you guys can see clearly here, it's a downwards trend. So what we're going to look for is a downwards trade. So we're going to look for a sell. And if the market was going up here, we're going to look for a buy, because the markets are going up. Don't go against the markets, guys, especially as a retail trader. Now, what we're going to look for is how many times it can touch a resistance point. So say, for example, this blue line is the resistance. Exact same concept that I mentioned before. If the market touches once, if the market touches twice, if the market... all right, so as you guys can see, it's hit once, it's hit twice. How many times do we need it to hit before it becomes a solid piece of evidence that the market is going to continue going upwards, guys? 3 times. If it doesn't hit it 3 times, that means, simply put, it is not a strong enough indication for us to take a trade. Guys, do not rush trades. Trades need to be only taken once you are 100% certain that you are in a strong position to take that trade. Don't just take trades for the sake of taking trades. You know, maybe you haven't found an opportunity that day and you're thinking, oh fuck, I need to make a trade, I need to make some money, let me just enter a trade. No, Over trading is one big mistake that new traders make so often, and I see it very often. You guys trade when there is no opportunities just because you want to trade, right? Trading is exciting, you're making money, you're like, okay, great, when's the next trade gonna come up? Oh, it's hit it twice, maybe that'll be enough. No, it will never be enough. You guys need to be very, very consistent with what you do to make consistent profits. So as you guys can see, once, twice, and then say for example, the market's gone down here, the market's bounced back again, boom, boom, boom. All right, guys, this is fantastic. We're gonna take a trade here. So, fantastic. You've identified 3 points, 1, 2, 3. Now, what are you gonna do now? So once the third point touches the resistance, what you're gonna do is you're going to go here. Sorry, you're gonna go here, and you're going to press long or short. Now, long and short is the same for buy and sell. Right? Buy and sell is the same as long and short. Long means you're guessing that the markets are going to go up, and sell is the same as short. So in this position, guys, what are we doing? Are we going long or are we going short? Drop it down in the comments. Are we going long on this or are we going short? Sorry bro if I said your name wrong. Long. All right, amazing. This means you guys are listening. Fantastic, guys. Amazing. This means that this is a good opportunity for us to go long, because long means we're going to guess that the market's going to go back up. And why are we doing that? Because we've realized that this is a strong resistance point and it's hit it 3 times. We've identified this opportunity and here we go. What we're going to do is we're going to press on the left hand side here, and we're going to press long position and we're going to open it at the resistance point. Now, once you click, this is going to come up a green shaded area and a red shaded area. Now, what does this mean? How are you guys going to use it? This is very, very important. This comes under risk management. Now, what is risk management, right? Risk management in trading is everything. Every single trade that we take consists of strong risk management, so that worst case scenario, you're not losing your whole account, right? This is the worst thing that you can do, especially as a beginner, is if you are taking a trade, you need to know exactly what you're risking and exactly how much you're able to make. Because without a plan, you're planning to fail, right? So worst case scenario, how much are you going to lose? Best case scenario, how much are you going to win? Now, this green shaded area represents profit. Now, this red shaded area represents loss. So, obviously, we want our profit to be higher than our loss. So, if we move this cursor up and down, we can actually navigate how much we're willing to lose. So, this is called risk to reward. So, if you want to write that down, risk to reward is very, very important, especially when you're taking these trades, because you need to know exactly how much you're risking and how much your reward is. All right, fantastic. So if, for example, we were going to take this trade on this blue line, all you have to do is open this long position here on the chart. Keep in mind, guys, that we don't actually do any trading on TradingView. This is just so that we know what we're doing. We're tracking our trade. We're understanding what we're doing before we do it. Because again, if you don't know what you're doing before you take a trade, then guys, of course you're not going to be successful with this. You really need to be diligent with what you do, right? You need to be smart with what you do, and you need to know exactly what you're doing before you do it. So everything is done on TradingView before you actually take the trade. So now what do we know? Now we know that we're going to go long. Now we know how much we want to. So now we know the important part. So we know that we're going to go long because we've identified this trend. We've identified the position we're going to go long in. And now what we're going to do is we're going to open this trade, obviously live. So let's have a look at the 2 possible options that could happen with this trade. All right, best case scenario, the trade goes from our resistance and it goes boom, like this. This is the best case scenario, guys. Why is it the best case scenario? Because it's gone here, it's hit our take profit, so the take profit is at the top here. And we've just cashed out on some big money. And then worst case scenario, which happens occasionally, keep in mind guys, this is trading, you're not going to win every single trade ever. as long as you're more profitable than losing trades, that means you're making money, and that's all that matters. Boom, worst case scenario, we lose a small amount. Best case scenario, we make a lot of money. And this is exactly what you guys need to be looking for, which is obviously a very, very simplified version of a trade taken with obviously support and resistance. So the key factors here are, is the market going upwards or is the market going downwards? We identify that literally just by looking at the chart. This is going upwards, this is going downwards. If it's going upwards, that means that we're looking for a long, and if it's going downwards, that means we're searching for a short or a sell. And once we've identified that, we look for a point or a place that has 3 points of resistance or 3 points of support. Once we've identified that, so that's step 3, once we've identified that, we're going to find exactly when it hits it again for the 3rd or for the 4th time, and then we're going to do the exact same thing. So this is a very, very easy, very, very short example of how to use this. And in an ideal scenario, this would be bouncing off the resistance, which happens quite a lot, and we would have made some very good money. So this is a very, very good strategy you guys can use at home, so that you guys can start taking your own trades and understanding why these trades are happening and why obviously we are making these trades. So this is a very, very easy strategy to use. Guys, if you have any questions, please drop it below. I'll try to answer a few of them now for you, and then we continue. Question for you, do support and resistance lines have to be exact? No mate, it doesn't. So you can actually have a zone. It's called a support zone or a resistance zone. So if you go here, you'll be able to click a zone. I think it's this one. Yeah, price range. So say for example, this is the price range, and it could hit this price range, boom, 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 right? It doesn't have to be the exact point, but it has to be, not too far off. Is the bottom the stop loss position? Absolutely, mate. So down here is where your stop loss would be. Down here would be where your take profit would be. And depending on how the trade is going, whether it's going exactly as you thought, maybe it's gone down too much and it's gone back up again, you might want to close this trade before it hits your take profit and obviously close out some profit. Boom, boom, boom. Any more questions? What trading platform do you use? So MetaTrader 4 is the application that we use, and FXS is the brokerage that we use. If you're brand new, you haven't set that up, you can send me a DM. I'll show you guys how to use MetaTrader 4, and I'll show you guys how to use and obviously how to sign up to your own account. With the VIP guys, we don't do trades for you. You're in control of your accounts. We just give you guys our trades and our ideas, and obviously you guys can copy them. And obviously I would highly recommend you guys learn for yourselves how to do this skill also, because like I said, you could be anywhere in the world. If you have learned this skill, you will never ever need anyone to make money ever again. You can do it yourself, which is obviously the most important part. Any more questions, guys? The 3 points are only on the minute candles? No, not at all, bro. The reason why I use the minute candles is because it's short-term trading. We're doing quick trades, right, in and out. You can actually change this to 5 minute, 2 minute, 3 minute, 10 minute, 15 minute, or if you're trading long-term, you can change it to 1 hour, 2 hour. Basically, it brings up a completely different chart, and each candle will represent a lot more time. So that means every one of these candles will be 1 hour's worth of time. So you're going to see in 1 hour how did the market move in that hour. Why gold assets? Man, gold is super flexible in how it moves, and it's very easy to read compared to a lot of other pairs, but there's also a lot of movement, which gives us a lot of opportunity for us to enter these trades. How long should we look back on the trades to create a structure on a minute candle? If you have a look at the minute candle, you're going to start identifying trends, right? If the market's going upwards, the market's going downwards, it's a good indication on how long you should hold this trade for as well. So if in half an hour's time it's still going like this, more than likely that your analysis was wrong and you should get out of that trade, right? So even if you're looking at the 5-minute chart or the 10-minute chart, it's the exact same concept. Gold is very easy to read. I agree. Yeah, definitely. It's definitely not easy, but it's a lot easier than a lot of the other pairs that are available to us. For example, like Japanese yen and all these other pairs that you can trade. But this is definitely one of the easier ones, and there's also a lot of movement in goals. And obviously for us as traders, movement just means money, because we can make opportunities, we can make money. Like this morning, for example, we took a couple of trades. The second one was very big, and obviously made a lot of money on that one. So the movement in the market is where we make our money. How do you know what coins to trade? If you're talking about coins, I think you're referring to crypto. I used to trade crypto quite a lot, but for day trading, I found gold to be a lot easier. Obviously, crypto is great for its own purposes. For example, like long-term holding and all this other stuff. We've stuck to one because this is, again, if you're a master at one, it's a lot better than being average at a bunch of shit. Do you have an example of a 3-point line where on one of your own trades? There's plenty. If you actually go back through our trades, you can actually draw these lines on our own trades and see exactly what we're doing, so that you guys can keep track of these trades while you're taking them as well. I highly recommend you do that, because this is how you learn. You see it for yourself. So definitely do that. About market volume and FOMO, any info? Mate, market volume is huge when it comes to trading, but again, this is a very beginner session, so I don't want to go too deep into a lot of that because it'll take hours. What I suggest for you guys is to master what we just talked about now, and once you've done that, start digging deeper into things like market volume, because again, we do look at market volume quite a lot. Will there be more Zoom calls? If there is enough people who do want them, obviously, like I mentioned, we are also running the group and everything else like that. And inside the VIP group, we do tend to do live streams on the weekends when we're preparing for the new week and stuff like that. We're also adding new course content, and again, it's all free inside. So yeah, get inside the VIP and you'll be able to get a lot of this stuff for you anyway. We also just launched a new self-trading courses in there as well for you guys. Again, it's free, so why the fuck would you not? It doesn't make any sense. Learn. Guys, I'm from Australia. I'm from some shithole called Woodridge. I don't know if you guys know where that is. But I literally taught myself this stuff. Right? Anyone can do this, but you need to do it with persistence and not do things half-assed, right? If you do things with persistence, you will succeed, and it's as simple as that, guys. Anyway, everyone, I hope you enjoyed. Thank you, Basil. Have to shoot to work. Don't worry, guys. We're going to be heading out. If you do have any other questions, please send me a DM at Basil Trading Support. I will help you guys out on there, and I hope you guys learned a thing or two also. Peace out, guys. Take care. Love.